It's about that time of day again. Welcome to your nightly newsletter, boys and girls. My name is Joseph James. It's Monday evening, April 6, 2015. In tonight's newsletter, boy, crude oil had a pretty nice bullish run after the holiday weekend, but the overshoot of both, that's right, both bull channel highs on crude will likely be too much to keep this price from moving back off the highs, back down to the lows of the channel. We even got volume confirming today on both crude and gold, but we'll have to wait and see. I think we're in store for some falling prices here. Is 50 going to be back in the cards for tomorrow? We'll have to wait and see. How about gold? Gold's coming off a gap higher. I even restarted my charts a couple times today, looking at that chart saying, is that gap really that big? Yeah, it's for real. It's for real. Gold is coming off a very large gap higher over the weekend. Apparently too much searching for those Easter eggs, apparently. Coming off the holiday weekend with a big gap higher. Traders reacted to disappointing jobs report last Friday. Remember that jobs report that nobody could trade? Yeah, well, that's what resulted in that big gap up there on gold. And we know that most gaps get filled. Yes, they do, kids. And so the undershoot of the channel highs, yeah, we expect to see price on gold coming back here on Tuesday. It sounds a little bit like where we left off last week. Well, we're going to talk about all that stuff in a moment. As you can see, we have a great newsletter for you guys and gals this evening. But before we begin, please remember, I teach all of our students here at School of Trade how to create all the charts I'm going to be using today, as well as how to trade each level of support and resistance in our advanced course here at SchoolOfTrade.com. I also want to remind you, make sure you're watching this newsletter video over here on our trading blog at sidewaysmarkets.com. Yeah, that's right. If you're watching this video on our YouTube page right now, you'll notice we have a great YouTube channel. But make sure you follow the link. It'll be right in the description of the video if you're watching on YouTube right now. And head on over here to Sideways Markets for 3 specific reasons. The first reason is I've got a free pass for you. I would love to invite you to come out and test drive our live trade room, see what it feels like to be in our trade room as a member here at SchoolOfTrade.com. If you're not a member of School of Trade and you're curious what's all the commotion about, I got a free pass for you. All I need is you to click on that button there for the free pass, give me your name and your email address, register for our free pass, and you'll be off to the races. Second thing here is we have a nightly newsletter mailing list. That's right. Never miss another newsletter ever again. No more wondering when it will be posted. Now, Monday through Thursday evening at 8 p.m. Eastern Time, I'm going to send you an email once this newsletter is published. Last thing here, all of the charts that I'm going to be using tonight. That's right, all the charts. I even have a couple bonus charts in there for you for crude oil. You can download and use all of my charts, right? That way you don't have to keep watching the video over again, although I wouldn't mind that, right? Now you can download all those charts by following that link right below the video. Just see where it says, click here to download today's charts. You can download all of them and have them on your computer for tomorrow. All right, so grab your free pass, register for the nightly newsletter mailing list, and of course, you can download all of my charts right below that video. You ready to rock and roll here? Hope you guys had a great Passover weekend. Hope you had a great Easter weekend. Major League Baseball opening day today. I'll tell you, if you don't like opening day on Major League Baseball, something's wrong with you. That means we got spring is here. As I'm recording this right now, my boy Dusty Pedroia set a new record. 2 home runs in the first opening game. Wow, incredible. He fisked you. Hadn't been done since 1973. Anyways, let's keep pushing. How about the gold? Yeah, don't adjust your TV sets there, kids. That really is just a huge gap there on gold. We don't see this very often, right? We don't see these big gaps very often on these almost 24-hour day charts, right? This is what happens when you have a big holiday. And at the same time, and I was scratching my head last week saying, when was the last time we saw a holiday where the markets were closed on Friday with non-farm payroll, with Easter, and with Passover the same weekend? Anybody know the answer to that? Neither do I. Maybe you guys could post that below the video, but it definitely hasn't happened anytime recently. I'll tell you that much. Trying to have some fun with you guys here today. So we get a big gap up, right? Big gap up over the holiday weekend, undoubtedly because of that disappointing jobs report. Didn't really catch anybody off guard. Obviously, we heard last Wednesday from the ADP employment report, and we pretty much knew this was coming. So didn't really catch anybody off guard. Now, we know that most gaps get filled, so there's a really, really high likelihood we're going to go back maybe back to 1200, but eventually here we are going to find our way back to that 1202.6. You can look back over decades and decades and decades. It's tough to find a market that does not fill a gap. Now the question is, how do we get there, Joe? That's the big variable, right? So don't go thinking I'm not predicting us back 12.0. Well, let's see what we got here. But we know that most gaps do get filled, so keep that in mind. Now, I think the real clue we see here comes right up top here. So we have a clear undershoot, right? Get a clear undershoot of that channel high. Remember, the way the markets work, we should be able to rotate up, right, hit that high here. So naturally now we are going to gravitate back down towards the low of this channel. The undershoot of the high tells us to expect a little bit more of an overshoot of the low. So we undershoot the channel high, looking for an overshoot of that channel low, possibly to fill the entire gap. So we can definitely expect 12.12. We can definitely expect there to be a battle zone breakout right here at 12.5. And I think I'm going to show you guys a little bit more accurate chart here, but we can definitely expect to see a little bit of a bounce here though, but it's very likelihood though that we find our way inside this area here. At the very least, I would expect to get down into this 1209 to 1206.1 area. A full gap fill here will put us back to 1202.6. So it is possible that tomorrow we finish the day here just a little bit above that 1200, right? Maybe we overdo it a little bit and find our way all the way back to that 1200. So smart traders right now, smart traders will definitely be looking for that push back to 12.5, and then you know there's going to be some buyers there, right? So let's take a look at that area here. Let's take a look at this area right in here, because this is where we really got to look closely at, because that's where the battle zone's going to occur. So undershoot of the high. Again, most gaps get filled. Big round numbers are waiting for us down here. I think the trade here is really going to be right in this 12.5 area. We're definitely expecting prices to go lower here on gold. How far will they go? Well, let's take a look a little bit closer here, and let's see if we can figure that out real quick. Looking over here at the price action chart, right? This price action chart shows us a couple big clues. First of all, we get the gap. Now, would you believe that that gap range also gives you a range expansion? Huh, who would have thunk? I guess human beings are creatures of habit. Yes, we definitely are, right? What's happened in the past is likely to happen in the future. So we gap up here, right? Very, very obvious there. And now we're starting down here with a bear channel. This bear channel will likely be one of the most important clues here going into overnight and tomorrow morning early. I would expect price to either continue inside of this channel, or if we see a break of that channel, you know those late adopters are going to try one more time to revisit that low, right? So we'll definitely expect price to go lower. How it gets lower, it may go straight down, right? If it goes straight down, we're selling retracements. It may break, right? And then, of course, rattle around as it goes back lower. If it does break, look for that A, B, C, D measured move going lower, A to B, C to D. Again, difficult to predict where it will go to, but I've got some definite areas of support marked up here for us that we'll be watching for tomorrow. Boy, if it really starts to get crazy tomorrow, we could find our way all the way back down to 1202, 1200, the big round number, and dare I say, later on this week, back at 1192.6. It's only, as you can see here, it's only 20 points on gold. It's only 200 ticks. It could easily do it. It could easily do it. Now, what I want you guys to keep in mind, though, is this big gap, right? The big gap's probably going to be the most important part of this. You get the gap high, 12.12. You got the gap low, 1202.6. Now, like I say here in the text right now, you can almost smell the short sellers. They're just drooling. They're salivating. They are eager to sell this high. So, you know, these financial markets, right? They're not going to make it that easy on us. So we're most likely, now, of course, I hope I'm wrong, but we're most likely not going to see it just go punk and just collapse, right? What will typically happen is, and again, this is because you've got it'd be too easy, let's put it that way, right? Simple way to say it, it'd be too easy. I would expect price to try to go lower, shake out all those aggressive sellers, and then make our move lower, right? Remember, going into a range, going out of a range, these markets are just not going to make it that easy on you. So Think like a shark. Think like a professional. Professionals are here to take the money from the retail traders, and we would definitely expect those retail traders to be sitting there just trying to blindly sell that 1202.6. That's why I'm calling it the battle line between the Bulls and the Bears. Expect there to be, again, I would imagine we'll probably see it go pretty easily into that range, run back up, probably fake out the buyers before you get that final tumble back down, right? Again, if we can make it back in and then make it back again, it's almost a guarantee. If it just slices right through, well, oh well. You can, of course, start selling your retracements right on the way down to that 1202.6. I don't think that's going to be the case, though. I would assume it to try to go in, suck in all those bears, bounce them out, get the bulls going. We're going back up, and maybe not that fast, right? And then back in we go to finish off that move. Look back over the past few months, and you've seen we found those relatively consistently. Use those targets below. This little gap range here, you'll notice this little high, if you look left here, 1208.3. That'll make for a nice little, little 50% gap fill target, right? About halfway there. So take a little nibble off there, a little nibble off there. And then when you get down to that gap fill, you will have to be on alert there, whether we go up or whether we go down from there. Come out and see me tomorrow morning, and we'll take a look at this in real time and see where we are, and we'll further analyze this chart. Remember, we open up our trade room tomorrow morning at 8 a.m. Eastern time, and we'll know a lot more about what's happening at that time. How about some crude? Crude oil, another market that had a nice bullish run after the holiday weekend, but once again, we're seeing those overshoots and undershoots. These darn markets, they can't quite keep it together. Low volume, again, a lot of knee-jerk reaction. Remember, this is the stuff that we talk about. This is why the exchanges like to have the markets open. When the markets are closed over major news events, you get tons of volatility because of what? That sense of scarcity. Traders have to wait until after non-farm payrolls come out to place their bets. Then they have the whole weekend to think about it, right? Watch CNBC, listen to Bloomberg, right? Watch my newsletter. They got all weekend to craft up, right, these crazy strategies, and then come back on Monday and bam, we get lots of volatility on relatively low volume because professionals know that's coming and they kind of stand away. So we get a little bit of an Easter Bunny rally here over the weekend on both of these markets. Big gap up on gold, and you can see here a couple channels right now. Get a long-term channel. This is a beautiful long-term channel. If you look closely at it, you can see the midline here is well respected here across the board. So definitely want to be using that channel. We get an overshoot of that channel high, and I thought, all right, well, maybe I get the channel wrong. No, let's draw it again. Draw it from the lows there. Oh, there you go again. Another channel overshoot. Very difficult to find us inside of any real correctly drawn channels right now. So that channel overshoot, what do we know about channel overshoot? We know the mission has already been accomplished by the buyers, right? Remember what happens. Markets will rotate. Lows up to the highs, back to the lows, back to the highs, and whoops-a-daisy, a little bit heavy on the Easter eggs over the weekend, and we likely now will see price overcorrect. The reality is lots of price action traders will be selling that overshoot, first of all. Then you've got the buyers that bought at the lows. They're taking their profit here because they're just happy they get a little bit more, right, after the holiday weekend. And so we know that we're looking for price to go lower. Where will it go lower to? Oh, I don't know, maybe 51. Oh, I don't know, maybe $50 a barrel. It's only a $2 move. Right? It's only about a $2 3/4 move here. So we may wake up tomorrow morning and find us right back at 50. If you're trading overnight, definitely be looking for selling opportunities off that high. Smart traders will be selling off these highs, but don't get too crazy because that volume definitely confirmed. You'll notice this was no joke. Now, I'm a little bit suspicious of the volume profiling on this. And remember, guys, don't be fooled by trying to use volume on faster time frames. It's in my opinion, it's almost a worthless endeavor. You've got to leverage that self-fulfilling prophecy. You've got to leverage the wisdom of crowds. Using volume on a faster time frame is a little bit ignoring the wisdom of crowds, right? You're trying to anticipate the crowd based on only a few people. So I would highly recommend against using volume. I will use it on these slower time frame charts. I get that question quite a bit from our viewers out there in YouTube land and on our blog. So make sure you guys remember I'm using volume on this chart, but I'm not going to be using volume at all on my entry charts, right? Keep that in mind. The reason for that is because volume works in the big picture by the wisdom of crowds, right? The groups of human beings. If we're using it on a smaller picture, we're trying to predict the group movement by only using a few humans. It's not really that good of an idea. Anyways, so that's why I'm using volume on the slower time frames to answer some of those questions that I get quite a bit about why I don't see volume on our entry charts on our blog as well. So we've got the expectations of price coming back. Smart traders will take the sell opportunities at those highs. But again, with that volume at the lows, we've really got to be careful. I'm not going to get too punch drunk here trying to go lower. I will take profit off at these lows. The hardest part is going to be waiting patiently for the buyers to step in and then fail to initiate that second move lower, that second leg lower back to 50, right? They're not going to be able to slice right through it. So we will definitely be looking for those buyers to engage, but if they fail here, you know where we're headed. You guessed it. Back to that $50 a barrel. We got the BMT here at 50 and a few nickels. We get a buy zone here at 50.18. And again, it's relatively easy to see here, though. We are definitely destined short-term to go lower. The big question I have right now is what happens when we get back down to that $51 a barrel area. Buyers will likely come in, and we'll be looking for those buyers to fail to get back down to that $50 a barrel. All right, guys, if I had to guess right now, I'd expect here by the end of the day tomorrow or Wednesday morning, we're back at 50, but we will definitely be looking to see what happens in this area. Let's do a little bit better job here. Let's zoom in a little bit closer and see where that puts us. And this is, of course, a little bit faster time frame, a little bit more accurate as far as the candlesticks go. And I'm going to zoom all the way out on this channel. This is one of the charts you can download here this evening with me. And I want you to kind of see the big picture on this. So again, price action is certainly bullish after the holiday weekend. However, we have a very narrow trading range. You can see right up here, and we get a FOBO. We get a FOBO of that trading range, the fake out breakout. Basically, the buyers just tried to push it higher. They failed. Normally, the first break of a range will fail. We're coming off the channel highs. Again, we're going to want to move lower. So that's why I say $51 in this area should be relatively easy to achieve. It's only $1 lower. So we could easily wake up tomorrow morning in the U.S. and see this thing right down around $51 a barrel. The question will be, what happens here tomorrow? We're definitely expecting price to get in and around this area, and then where it goes from there, it is anybody's guess at this point. Again, if I had to guess right now, I would say we wake up tomorrow morning and we're either at 51 or we're all the way back. Remember, we started the holiday weekend right at $50 a barrel. We were pretty much right in balance. And not a lot has changed since then, right? How could there be anything that's changed since then? We had a disappointing jobs report. We knew about that going into Friday morning. Let's not kid ourselves, right? As of Wednesday morning, this market had already priced in that jobs report. How, may you ask? Because ADP we saw on Wednesday told us exactly what to expect. It's almost never wrong. So the only variable I have right now is how quickly do we get back to 51, and then when we get there, do we see the buyers try to take it back up? You'll notice we have these range expansion levels here. These are going to make for excellent targets for you guys. 51.73, 51.51, 51.29, and then again, I got my eyes on that $51 a barrel here. We'll see how the day goes tomorrow. Keep an eye on the trend right now. You know we can see we got this bullish trend right now. So don't try to force those targets to the downside. Take your money and run, and then wait for more information down the lows of that channel. Don't turn these charts into a casino slot machine, right? Follow your plan. And if you don't have a plan, please tell me you're not trading without a plan out there, guys. We do this every day of the week, all day, every day in our live trade room. Come out and join us. We're here at SchoolOfTrade.com, and we have the absolute best membership package in the business. We got a free trial as well. Our free trial is the best in the business. We've been doing this longer than anybody else on the planet. I'll prove it to you. Join the free trial. I'll give you a chance to come out and test drive our live trade room as a guest. You can see our beginner, intermediate, and advanced membership levels here, and we always have someone standing by to help you guys out 24/7, 365. Thanks for tuning in, boys and girls. Hopefully you've worked off all the sugar high from this weekend. Enjoy the beautiful weather. Enjoy the baseball on television. And guys, shall we do it again tomorrow? Let's do it again tomorrow. Same time, same place, 8 p.m. Eastern time right here on my blog. And don't forget, come out and see me tomorrow morning at SchoolOfTrade.com, 8 a.m. Eastern time. We open up our live trade room. Join the free trial. You'll learn all about it there. My name is Joseph. Adios, amigos. Bye-bye for now.